Hello, traders. Hope you are fine and good. Let's back to chart. This is the Euro to US dollar chart. The market is in a downtrend and has broken the previous support level, indicating further downside movement. If we take an entry, it would be for a sell position. The two light green lines represent normal support levels. Here, the candles appear to be failing to move in a bullish direction, so we are preparing for a sell position. The RSI indicator and overall candle movement suggest that the market is likely to move downward. The most important thing is to understand market behavior. Many times, the market tries to trap traders. Always follow your rules and proper money management to protect your capital and achieve consistent growth in the market. This trade is a win. If you observe the seller volume and the large wick on the closing candle, it indicates that buyers are likely to enter in the next candle. This is a bearish pin bar with high volume, so we are placing a buy call option. Now, let's wait and see the result. Trading is all about psychology and mindset. If you learn and practice consistently, you can become a profitable trader over time. Try to avoid greed, emotions, and rushing into trades. Stay calm, practice on a demo account, and continue until your strategy reaches around 80 to 85% accuracy. Here, we have an opportunity to take a sell position. The 5-minute candles show clear signs of seller strength. After 3 or more bearish candles, when a bullish candle appears, it often indicates a temporary pullback and sellers may try to regain control. Since the market is already in a downtrend, we place a sell trade. It is also important that the trend line is broken to confirm the entry.